Overtrading and overconfidence?
Overconfidence is a particular problem for male traders, much less of a problem for female traders, as plenty of research suggests. The trouble with overconfidence is it leads to overtrading, and overtrading leads to high costs, which destroys your capital. It's one of the reasons why tipsters tend to not trade their own, actually set up fund management houses. Because actually it's very difficult to replicate the performance, a theoretical performance, with a real life performance.
Trading profitability is not about taking more trades, but rather taking the right change at the right time.
I think knowing when not to trade is quite important. Trading for trading's sake is not going to get you very far. I mean, I used to have a fund manager client who said to me, Louise, I only make 4 or 5 big important decisions a year, but I need to know when to make them. And almost when not to make them is far more important than wasting time, mucking around at the edges. And I think that's actually quite, classic Soros, when sterling was chucked out of the exchange rate mechanism. What marks Soros as a truly extraordinary trader is not that he spotted the trade, but that when he spotted the trade to go short sterling, is he bet pretty much the entire business on it. Because he thought from a risk reward point of view, this was an enormous trade. And so that was a very smart trader having the balls to go, this is a brilliant trade, this is a once in a lifetime trade, and I'm going to bet everything on it. But that's not because he's crazily unaware of risk. It's his comprehension of not all trades are equal. In your lifetime, you may get one great trade that will make you a fortune. A bit like the American subprime crisis. For all the guys who did all that research on collateralized debt obligations and all the various tranches of really very poor quality subprime mortgages, they spotted that it was a once in a lifetime opportunity to make their reputations and to make them obscenely rich. And I think understanding the difference between just an ordinary trade and a great trade is what a lot of people get wrong as well.
So do you think that it's this isn't on here, but is it worth a trader actually? If you set yourself aside to being a trader, there's almost a compunction to be making trades all the time.
Exactly.
Would you advise that actually you don't have to do that? You could literally just wait for the big one. Watch the bigger picture on this.
Well, so I've got another trader who said to me, actually, he was a professional trader, although he worked for himself. And he said, well, actually, every single morning, I forced myself to put a small trade on at the start of every single day in order that I got involved and therefore knew what the markets were doing. He said, because if I didn't put any money on the table, I would kind of know what markets were doing, but I wasn't as intimately involved. When you've got skin in the game, then you're committed. And so he would say he'd put a little bit, something, just a trade, doesn't matter, short, long, whatever, but just to kind of get the feel of the markets, how it's trading, what's going on, and then would start trading around that position. But that's different to recognising the trade of your career.